Morning everyone, Jack McGrath with NakedTrader.com. Well, LIBOR up a teeny tiny bit this morning. It's still under 0.25, but we are seeing carryover from yesterday in the front end Eurodollars. September's down 3. It's broken some good support here. 99.60.5 was your level. We went below there and now we're 57.5. So pressure continues in the front end off of the Greece debacle, the EU, the Euro currency's down 70 right now after a big down day yesterday. That chart, if you look at the euro, is broken down out of a triangle. The objective's like 9 handles lower. If you look at a monthly chart in the euro currency, you had an outside range reversal off the monthly chart. The objective there is 139.62, so we still have some downside to go there. I'd keep an eye on the euro currency carrying over into the front 2 interest rate contracts in the Eurodollars September and December. The back of the curve looks great. You had the 10-year trade up to the weekly highs, a full retracement in the 10-year. 124.07 was last night's high. We had 06 and 08 as the 2 previous highs in the 10-year week off the 10-year weekly. It is resistance. That's where you'd want to sell the market. You wanted to sell it there the first time up. Look for 123.31 as your first level of support. We'll see if we can stay above there. One thing I noticed this morning, the pivot is much lower. It's 123.11, so you got to be a little cautious on the about getting caught long. Now, if you started to get above 120, the 124.08 area, 126 is your next target, and that's off the monthly chart. So we'd be looking for more upside above 124.08. Right now it's resistance, but the back end of the curve continues to trade very well after yesterday's performance. We're getting a little bit leg up here this morning, so keep an eye on that. It's following out from, you know, the reds all the way out the curve. Looks very positive in the Eurodollars. We saw a huge amount of put trading yesterday in September and December. Remember I pointed out buying the DEIS 92.5 put spread for 3 basis points a few days ago. That settled at 4.5 yesterday, which is probably even on the low end, and DEIS below 53.5 now. That's gonna could put some more downside pressure on December. And that 99.50 strike, we're almost on top of the strike. We were 10 basis points out of the money on that when we were looking at it. Now we're about 3 basis points out of the money. So that, and you still have the 6 months of time left. So that really could kick into gear now. The belief of getting any more downside in the front contracts is probably out there. So you'll probably see some people looking to buy calls down here, looking for LIBOR to continue to stay under 0.25 or around there, and you get the slow grind back up as time goes by. So that's something that you may watch out for today. That's about it for now. Keep an eye on the September contract. We're going to say 60.5 is going to be our resistance level now. Above there you're looking for 64 again. Downside you have 56, 55.5. And then below there it gets a little bit sticky, so you got to be very cautious. Could trade down to 99.50 on a flush out. Have a good day. Jack McGrath with NakedTrader.com. Thank you.